Welcome back to Advanced Lectures of August 2025. Today we're going to be talking about how I use order flow to catch precise entries. Now, this is back tested from Friday, so if you do not believe in the concepts that I am teaching and that you do not believe in hindsight data collection, this video is not for you. For those that have watched my previous lectures will understand everything that I am talking about transcends into this lecture. Also, there is no difference in what I am doing to adapt for what Friday did. I'm just applying what I already do to a day that I wasn't trading. I'm going to keep this short because I want to keep viewer retention up. So I'm going to say what I need to say and get out. And if you don't understand it, then you must go back and rewatch. Now, this situation, what have we got? 9:30 opens. The same concepts will apply from 9:30. Now you're welcome to go and study what 9:30 wicked into. But for the sake of the video, I'm going to show you what was obvious. Because that makes sense for a lot more people rather than trying to highlight what this exact move did. So I draw your eyes to this 10 a.m. news, this PMI. We get this big candle lower, taking out the previous low. So in terms of this 10 a.m. news candle, what have we done? We've displaced through an old low. Now, time aligns for us to distribute higher, not to this high or highs over here, just highs in the specific range that we've made. So let's get back to the title of the video, how I use order flow to catch precise entries. Now, when you understand where price is going, you can execute on order flow with high conviction that we get to that draw on liquidity. And once you get good at finding your draw on liquidity, this is where you get a lot more conviction in entering on this order flow, for example. Because normally, what you'd expect is this. Liquidity sweep, breaker structure, gap. Now, we did not get that. So what some people do is they wait for that. But by the time that they wait, it's too late. Now, you can definitely wait. If we did wait, it would have been here. And it would have maybe given you an entry if you was clever. You didn't dip down into this gap because this is now a breakaway gap because the draw on liquidity is being eyed up. So what I'm trying to get at is you don't always need a market structure shift if you can understand order flow. So coming down here, my draw on liquidity is this buy side. Ultimately here, which we do take, but we understand the order flow. In order to move to this high, we're not just going to go in a straight line. So if we come to this first target, we're likely going to come back in before going up, because this is normally how you draw any trend line, right? Come up, down, up. So this is what it looks like with a price chart. Now, understanding this, you can separate this into two moves. You can target this as your first trade, and you can short the reversal expecting the move lower before the move higher again. Now, this may seem very cherry-picked. It can. It's up to you whether you believe me or not. You've seen me do this on my lectures prior to this video. This is the first video that I've hindsight back tested because I've not been at the charts for a week. So I did want to give you guys some price analysis rather than just psychology. But to answer the question in the title, how to use order flow to catch precise entries, you need to know your drawing liquidity. Now, knowing that my drawing liquidity is here, I can use this fair value gap to enter off, knowing that this move back into this gap should deliver price to here if our drawing liquidity is correct. Same with this one. And notice how we're not targeting lows. We didn't target this low. We targeted here. Now, if you go and research what this low is on your own charts, you'll see that this level isn't just what it seems like. So you could have also used this low. This was an easy low that you could have targeted. 2.30. Let's go to 2.8. Either or. But you see how as we come to this level, we reject off it, come back. But then soup here, we don't actually come back into a gap, but then we start printing higher. Now, do we move in a straight line to this level? No, we don't. Come up, come back down, then come up, then we take the objective. So, same thing happens here. We come up, lower, then take up the high, then move lower again. There's your market strategy shift, and you can sell here if you understand where the drawing liquidity is. Now, a lot of you guys would just see this low as the only target. As you can see, in this leg lower, we did actually stop here. So go and study why we stopped here, then come up. What did we come into? I don't know. Then we went lower to that low. So that low is going to be taken, but there's road bumps in price. So if you did understand it, great. If not, then something to watch back. If you don't believe me, you got to watch my previous lectures and my entry videos. We talk about the same concepts. But yeah, that's it for today. And sweet.